What is good, guys? It's Rey-Jay back with another video, and in this one, I'm going to be talking about the SPY, the Nasdaq, the QQQs, and Tesla. Break down what the charts are telling us and what the heck happened today, because the market did actually pull back a bit, despite how the market makers were fighting. And before I break anything down about what actually happened, what this could actually cause for the market going forward, and why on earth the market is just going berserk right now, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 7 free stocks plus free level 2 data. Any of those 7 free stocks could also be a free Tesla share, so make sure you check it out before they run out. The offer ends in just 2 weeks. So with that out of the way, let's get on with the video. I want to note something very important. In my video from yesterday, I told you I thought the market might actually get a bit of a pump, and I ended up being wrong because of the fact that the opposite ended up happening. And it's also because of the fact that the market makers were just not able to beat the shorts today. So why did I think the market could actually pump? The answer was we had quadruple witching, and the market was basically pumping as we got closer and closer to the big date. And the market would have pumped if the market makers had the power and the ability to win the fight, but they ended up actually losing for the day. Why is that? Why did the market makers end up losing? Because the shorts realized what the market makers were about to do. They realized the market was about to see like a short squeeze, right? A big push up to max pain to 400. They realized it. So what did the shorts do? They doubled down on their short positions and they worked very hard to keep the market down. And they ended up succeeding. Very interesting to watch. Instead of a short squeeze where all the puts end up out of the money, 761,000 ended up in the money. So it was a big fight. Uh, and at the end of the day, it is what it is. The market will do its thing. That's why you have to be very cautious during times like this. Now, for the future, we have FOMC on Wednesday that will affect how the whole market moves. We have to be very cautious. So, when it comes to the way I predict things, I just want to note that I can't be right every single day, but don't forget that I was correct almost every day of the week from Monday through Thursday. I was only incorrect, about Friday. So now what's going to happen from here? What do I believe is likely to happen? We're stuck in the middle. We're basically stuck around like almost 390. We could go either way from this point, but there is a chance, depending on the news and other factors, the market might try to fill this gap up here if we do have the ability to do so. And I say that because this thing is still looking like an accumulation. You could argue that this may have been it. I don't know for sure. Once again, it depends heavily on the news. But if the market could actually hold these important levels, like the 388.56 level to 390, if we could hold that and start pushing, there is a chance we could get one final push up for FOMC. However, even if the market pushes up to fill this gap or it just pushes up a little more, I'm not counting on it to be way too big, because when you zoom out and look at the bigger picture, we actually have a more bearish structure ahead of us. This is what the market's looking like on the 2-hour time frame. On the daily, SPY still looks like it is once again weakening. Now, we did have a bullish divergence that developed right here between these two areas, and it was playing out. I just don't know if this is the top or if we're going to go up a little more, and then we're going to see a big drop afterwards. But when you look at the 1-hour time frame, from a technical standpoint, we need more confirmation to actually determine what's going to happen. But I do want to note that the MACD is starting to turn more bearish. The PPO has flipped, and the market is actually showing signs of weakness. The reason why it's so hard for me to predict this is because we're just bouncing back and forth, right? We're basically stuck. We don't really have a big direction just yet. We basically bounce between 388.56 and 392 today. Kind of in the middle, could go either way, depends heavily on the news. But I do believe that no matter what happens, even if we do get another rebound or not, we're ultimately going to see downside in the markets. That's what I'm essentially seeing. Tesla especially has more downside to come. It was looking relatively weak today based off its price action. I know it didn't crash too hard. It actually tried to bounce a little bit, but it wasn't too big of a bounce, and it failed to fill its gap. I thought Tesla would peak around 187 to about 190. We ended up stopping at 186. And overall, it's starting to look a little bit more distributive right over here. Uh, it really depends on if we could actually hold these levels and get a bounce once again. Uh, if we could get a bounce, if Tesla does try to like push up to fill this gap, I'm not seeing much more upside for it. Yes, it could try to do that, but the technicals are starting to look more bearish, and it's likely going to see an even bigger drop later on. So it looks to me like Tesla is set for downside. I don't know if we're going to get one last bounce and try to push up one more time, depending on FOMC, and then we tank, or if we're about to tank now. I really don't know which one it's going to be. This will depend on FOMC and other factors. If Tesla tries to like fill this gap first and then comes down, it's ultimately going to fill this gap anyways, or it might fail. It may have already failed to fill the gap, and it's just going to start tanking from this point. We have a huge gap down in the 140s, and I do believe Tesla will ultimately come down here. It is unfortunate, but it is what it is. Nvidia is holding up pretty nicely, showing signs of relative strength. I know I called this out yesterday, and I told you that this thing would likely break above 260. We actually broke above to about 264, then we came all the way down, closing at 157. We do have a topping formation, which tells me that we might see some downside for Monday on this, but until then, we have to be patient. NEO is pretty boring, trading sideways, not really doing much. We have a very indecisive looking structure. It just pulled back with the market. We just have to wait and see what the market does to affect NEO. If Apple wants to be bullish, we have to retest 157.5. If we're going to be bearish, it's going to come all the way back down to 150. We're a little bit more closer to the more bullish possibility, but we do have major resistance coming up for Apple at 157.5 and also 160. So I'm not seeing the upside being way too strong unless we get a huge catalyst from the Fed. Besides that, it's not looking too strong at this point. For the triple Q, this got rejected off the resistance zone. I told you all my target was 309, but I thought the triple Q would hold up a lot better. We ended up actually coming down later on. Overall, it's not necessarily too bearish. We still have a crossover on the PPO. So in order for us to confirm the bearish trend, we need more downside. We need to see this thing come all the way down to 303, 301.98. Then we have 300. If it starts coming down like that, this is going to lead to a crossover from the PPO and the MACD, which tells me that there's going to be bearish momentum. And once again, the bears are going to have control over it. Right now, tech is not tanking as hard as the collective market. The dollar did come down, and despite that, the market still failed. So it is starting to show some signs of weakness. Now, once again, I don't know if we're going to get one last pump before we start to see major downside, or if we're just going to start downtrending from here, approaching the FOMC meeting. It's most likely going to be one of those two. The odds are favoring downside, but whether or not the downside is going to be like feeble, or if it's going to be a huge crash, it's going to depend now on the FOMC and what Jerome Powell says on Wednesday. So I want everyone to be prepared just in case. But anyways, that's what I have for this video. Now the VIX is up. Now like it's up like 10%. When the VIX is up this much, we do tend to see it come down a bit, but it's likely going to come down over the next 2 days, 2 trading days on either Monday or Tuesday. So there might be a rebound in the markets. I just don't know for sure. I will give you guys more info on this by Sunday. All right. So anyways, once again, the market's quite indecisive. We're still like balancing between support and resistance. Our major support was about $2 or $1.50 below where we closed, and resistance is about $2 above where we closed. So we're very close to the middle. Until then, we just have to be very patient. But like I said before, the odds are favoring downside right now for the markets as of right now. So please be very patient and do what you have to do. And just get ready because FOMC is coming. If the Fed pauses, which I'm not guaranteeing, but I'm just saying if they do end up announcing a pause, the market could squeeze and start to rally. But if the Fed gives us 25 basis points or even 50, we could see more downside and maybe even a crash. Okay, so we have to be ready for Jerome Powell. He's going to be speaking on Wednesday. Until then, I will give you guys more info on Sunday about what I see happening for Monday. Thank you all for listening. Have an absolutely incredible rest of the day, and I'll see you guys in the next one. The market to the moon because the long-term future is still incredibly bright, and peace out.